Hey traders, hold on to your hats because I'm about to show you a very specific group of stocks that have hot seasonal trends over the coming weeks. Now, before I go any further, I must show this important disclaimer. Please feel free to read it and then we'll get right back to the video. I'd say the number one challenge we face as traders each day is having a high degree of confidence that the stock we are about to pick actually has a great chance of moving higher or lower as expected. Because let's face it, we're spending hours away from our families, our friends, things we love to do, whether it's today, tonight, the weekend, or even a holiday, all in the hopes of trying to pay the mortgage, a car payment, or even earn some money for a nice vacation. But you know what? Even after we've narrowed the stock choice down to just one, it is still no better than a 50-50 coin flip as to which way the stock might move. But what if there was a way to change all that? So instead of spending endless hours on researching stocks, high probability stock ideas could be generated in just seconds and served up on a silver platter every day, all with high degrees of historical accuracy. Now that would be a game changer. So let me show you how right now. All we have to do is go to Financhill.com, click on screen, click on seasonality, look for stocks that are going to rise at least 5% over the next 16 weeks with at least 70% historical accuracy. And we're done. A couple clicks, and every single time we log in, we can see the hottest stocks, whether we want this to be 4 weeks, whether we want it to be 8 weeks, 16 weeks, 24 weeks. All the heavy lifting is done, and all the hottest trade ideas are now listed. Now, what I've done for us today to save some time is I've highlighted 3 specific trade ideas. So if you remember, our search was for 16 weeks. Now, I just want to share with you what this chart is. This solid line is what the stock, in this case, NVIDIA, our first example, has done in the past, ticker symbol NVDA. This dotted line is what the stock might do over the next 16 weeks, based on its historical track record. The software is not predicting the stock will go there. The stock's historical track record says if it lives up to its historical average, this is what it could do. That's why it's called the probabilistic future price and not the predicted price. The software or no one can predict where a stock can go. And what do we see here with NVIDIA? We see a little bit of a spike, a rip, pause, and then a move higher again. And the software will actually tell you precisely how it performs. So over the next 16 weeks, NVIDIA has on average historically risen by 30.3% based on 19 years stock performance. So in 14 of 19 years, NVIDIA has gone higher. That's a 73% historical accuracy rate. That's pretty powerful, but it gets even better. If we go back up here, we can actually move the slider left or right and see if some of the numbers would increase at all. If I go 1 week to the left and make it 15 weeks, you can see the historical probability jumps to 78% and it goes up 31.4%. So let me ask you a question. When's the last time you did all that homework, you got it down to one trade idea and you said, you know, I think NVIDIA can go up 31.4% specifically over the next 15 weeks with a 78% accuracy rate historically? I would say probably never, right? When we can now unleash the stock's own historical track record as our secret weapon. Let's go do another stock. The next one I have ready is CTSH, which is Cognizant. Again, I'm going to set the slider to 16 weeks. That was our original search. I'm going to scroll down, and what do we see over 16 weeks? Well, Cognizant has on average historically risen by 29.5% based on 20 years of being publicly traded, all the data that we can get. So Cognizant has risen higher in 17 of those 20 years, 85% historical track record. This is amazing. In fact, we can actually see a little bit of a dip right now, then it just soars, plateaus for maybe a week or so, rips higher, and then pulls back right as the new year begins. In fact, if I were to take this out to 52 weeks, I can look out for the next year on how the stock historically trades. You would think that with 20 years of historical performance, you might see like a flat line. There's no real bias up or down, when in fact, there's huge biases between October all the way into January and then again into March. And then once you get into that March time frame, it actually drops, it pops, and then it goes nowhere fast. So think about it. If I wanted to be selectively aggressive, via maybe some long stock, maybe a long call position, I could consider now, given the massive seasonal tendencies, right? And then look to maybe bail out and go try to find something else. And I can relocate my capital and be very strategic in how I want to deploy it. Or if I'm bearish, maybe I'd even think about being a bear in this point. Not to mention if you're a more advanced trader about credit spreads and all that other really cool stuff. And the final trade idea is Delta Airlines, DAL. If I go ahead and scroll down here, over the next 16 weeks, the stock has historically risen by 23%. That's pretty amazing based on 11 years of stock performance. So Delta has risen higher in 9 of those 11 years, which is a statistical probability of 81%. But it gets even better. If I go up here and move this cursor left or right, I'll see that if I go to 15 weeks, it jumps to 90%. So in 10 out of the last 11 years, this stock has moved higher by 21% on average. You can actually see the dips, the rips, the dips, the rips. The airlines, again, they're incredibly seasonal. Knowing that actually in January, they typically have rough times, stocks like JetBlue. This is priceless information. This historical data can now be your secret weapon to find the best times of the year to consider being bullish or bearish on any stock.